to make the transition and what communities wanted. And then what we were funding at the national level, which was really interesting, but also not necessarily the same thing that we were seeing in community. And so it started Elemental as a way to say, what if we brought some of that breakthrough decision making closer to the community, closer to where the transitions are actually happening, and closer to what communities really want and are actually asking for in the climate transition. And could we make things go faster by doing that? And so we started Elemental. Entrepreneurs are really at the center of it because we believe they're creating the next big companies, the next organizations that are making this transition happen. So entrepreneurs at the center of it. And then following out from that, a number of different sort of work streams around policy, around education and interns, around corporate partnerships and equity and access and community partnership, all the things in the system that are needed to make entrepreneurs successful and climate transition successful, and that you can really only do in a nonprofit. So there were things that we were learning on the entrepreneurship side that we wanted to be able to go fix and work on. So we started a policy lab, for instance, to go bring policymakers much closer to entrepreneurs. So being a nonprofit just gives us this amazing flexibility to go after the system-wide challenges as we see them, while working with entrepreneurs keeps us close to actually what's happening on the ground, as opposed to sort of like some think tank in the clouds about what would be nice in the climate system.
And you mentioned it's, changes every 6 to 12 months over the last 13 years, a lot of change. What's the current iteration at the highest level? Like, how does it run today?
Yeah, so Elemental runs today as a cohort model. So we look at a couple thousand companies each year. We select between 15 and 20 to fund, and we fund actual projects on the ground. Usually they're first of a kind projects for the companies. And we also have a pre-project track where we fund companies that are in the go-to-market stage, and we help them in a really intensive way in our go-to-market. So help them with sales and financing and investing, all kinds of things on that side. So really kind of hands-on work with the companies. Our portfolio is one of the most diverse in the industry. It's been really commercially successful too, as you note. And the secret sauce is really working with companies to deploy them over the course of a couple of years. And so we work with companies to deploy in communities, and then we bring in other services, whether it's interns, storytelling and video, policy support that's really key to clear a problematic regulation or to pass a bill that would be helpful. So it's a whole bunch of other things in support of that. So Elemental right now, we have 2 headquarters. We have a headquarters in Honolulu and a headquarters in the Bay Area. We have about 50 people on the team at Elemental, and they're really an extension of our portfolios team. So they're really helping companies grow. And then on the other side, they're really helping break down systems that are illuminated by helping our companies grow.
Incredible. Austin, anything that you want to add at this point?
I think Don summed it up really well. I think that one of the things that's great about having a partner like Elemental is that, particularly for those first of its kind investments, there's so many that we wouldn't see as those success stories today had Elemental not been around. And as a result, companies that may look like them or may try and emulate them or have a business model that we wouldn't have seen 5-6 years ago are now in this place where they're able to go out to a more traditional VC, whether it's Earthshot or otherwise. And that gives more opportunities to entrepreneurs like all of you to take those bigger risks, which frankly, we just need to see in order to meet some of the targets that we have to hit from a decarbonization perspective.
Absolutely.
Yeah, and from a stage perspective, I'll just jump in there to say that, so on the stage side, Elemental we actually really cross stages. So we've invested in everything from just a couple of people and a prototype to Series B, Series C companies, because the commercialization path is really long and companies hit different problems at different points in it. And so Elemental is actually structured to be highly customizable to companies throughout their commercialization journey. And what's also really different about the way we work is that from the very beginning doing this work, because we're based in community and because we work in frontline communities, we have equity at the core of what we do. So that has a couple different flavors. And we work really deeply with companies on equity which means what you're doing inside your organization, diversity, equity, and inclusion, and diverse supply chain, all kinds of things about who your organization is and who you are as people. And then equity out, which is how are you deploying in the communities where you want to make impact, and how are you deploying in frontline communities. So it's woven into absolutely everything we do. And it's one of the reasons I think that people come to Elemental because they actually really see that community and equity can either be a competitive advantage for them or create real business risk for them if they don't address it in a pretty holistic way.
I love that. There's so much to dig into on community, on equity, on first of a kind projects, on the ability to actually go cross stage. I think that's really special and really unique. And I think your ability to bring in mentors and people that can actually solve problems of the companies that you all are working on. And so I'd encourage everyone here. I can't dig into all of this with you all in the 35 minutes I have, but I encourage you all to like drop questions in the Slido, upvote each other's questions, and just, dig into any of the topics that you're really interested in. So one thing I wanted to dig into is just location. So it seems you have 2 headquarters, Hawaii, California. Also seems like you all make a fair amount of investments in Asia, New Zealand, Australia, certain like hotbeds. And the way that I heard you talk about it before was those are sort of test beds for these first of a kind projects. Why these locations, and also why first of a kind projects? Why is that the gap that you all are filling?
Yeah, it's a great question. So I think of it, I'm not, terribly good at yoga, but I think of it like warrior 2 in yoga, where you really lean into your front foot, really lean into your back foot, and then your arms across are sort of the rest of the world. So I think by really leaning into Hawaii and really leaning into frontline communities in California, it actually provides us a ton of accountability to being in community. It's very different than if we were trying to do this community-based work from New York or from DC without, bumping into people at the grocery store who may or may not like something that we're building. And that's actually a really different kind of accountability in community. And it's that accountability that then we try to learn from and apply when we're doing projects all over the world. And we've funded things all over the world now, across Europe, Australia, Asia, like you said, all across North America. So we're much more global now, but really try to stay honest and accountable to the communities that we're in. And then specifically to, sort of geographically, why that's important is that we want to follow where our entrepreneurs think the best markets are. And we want to really focus on markets that make sense for entrepreneurs, as opposed to like where we have relationships and we want them to be. So we'll be as helpful as we possibly can, but really it's about helping our entrepreneurs succeed wherever that is. I forgot the second part of your question.
And just to clarify on that, so they can be based anywhere, even though you have headquarters. Okay, great. And then the second question was, it seems like you all found this gap in first of a kind projects, right? And but it seems like across the stages. So they can be like tiny prototype projects. They can also be potentially like first of a kind project finance. Maybe you should correct me if I'm wrong. Mm-hmm. But it seems like that's the gap that you all are filling. So how did you land on that gap, and why is that a gap, and how can you fill it, whereas others can't fill it as well?
Yeah, it's a really good question on projects. So, most things in climate actually have to be built or interacted with people in a different way than anything else in tech. And so it's a particular skill set. And when we started in place, it just naturally is project-based, because when you're in a place, you're actually testing things with the people in that place, like places are people and vice versa. So it was really about being people-centric and finding projects that make sense and people can actually test and customers can actually test. What we saw early on was that was the kind of risk that was really difficult for most funders in the space to take. And because we have philanthropic capital and we have flexible government capital, we were able to take that risk. And we've had some really ugly experiences with first of a kind projects. We've funded over 100 projects now, and some things have gone really badly. And we're able to take that risk, but that's actually what you have to do in climate. And someone has to do that to see what works and what doesn't. And, everything from not having, communications in key places on the islands that need sort of cell communications to make a solar product work or energy efficiency product, to really intense, like sort of community pushback on things that we thought were really interesting, but hadn't been really fully vetted. And so every single one of those, we learn from, and I think there's a special kind of learning and sort of pattern recognition you get from doing lots and lots of deployment in communities. And that's what we've iterated on over and over and over. And then, I'll tag Austin in here, because what we did then last year was we spun off Earthshot Ventures, realizing that, it's actually really helpful to have venture investors that also understand that early project risk and have been experienced at building things. We are bigger fans than anybody of having so many tech investors coming into climate now. We think there's not enough capital. There needs to absolutely be more from every corner. And we're often brought in as Earthshot as investors that really know climate, because we've built a lot of stuff and have been through a lot of cycles with companies in building stuff and trying to build actual projects. So I think that's one of the things that's one of the reasons we spun off Earthshot Ventures. We wanted to actually provide that experience as a co-investor in the venture community. And I'll let Austin weigh in there, but I think that's been one of the key things that has differentiated Earthshot in the space.
Yeah, I think, Don, you're 100% correct. Obviously, it's been great to see so much capital come into the space, whether it's from the folks who have been in venture for a long time and are now looking for the next new thing, or whether it's the plethora of new funds that you're seeing being raised by folks who are coming into venture for the first time, or coming out of having worked at the Teslas of the world, or whatever it may be. I think that the level of interest in the space is finally approaching the place where it's getting to not be a factor of 10 off from the size of the problem that it has to address. And to that point, I think that's where Earthshot and Elemental are really complementary. There are definitely some companies that overlap, that whether it's the first of a kind and now they need some additional capital to get to that phase of commercialization, or they need a new network to really take off. But there are also some companies that Earthshot will look at that Elemental may not. And whether that's because of the size of the stage, or maybe it's just that Earthshot's network can be helpful in a different way than Elemental's can. We see that as a great synergy between our organizations, because we do ultimately have the ability to work closely with each other and share resources and share deal flow, and a lot of trust between the two. So I think while solving those first of its kind challenges is really important, Earthshot having more of that traditional outlook of venture capital fund, and being able to really bring not only kind of the DNA that we have from Elemental, and being able to say, yes, this actually is a project that's going to have the potential to really reduce emissions or have a positive impact on sustainability for the world, where some venture investors who are entering the space may not have the credibility to do that yet. That's a really important place for Earthshot to play, particularly since all of the investors on the team have really been in climate for their entire careers, and have a lot of different perspectives through the cycles, having seen what's worked, what hasn't worked, and how we can get the things that we need to have work the second time around be more successful from those lessons learned.
Amazing. You essentially asked or answered the question that I was going to ask. And reminder, I have 15 more minutes between the three of us. We'll go to audience Q&A, keep dropping questions in the Slido. I think, essentially what I'm going to take away, and correct me if any of this is wrong, but Elemental served this key space, and it to me almost had a blended finance approach, right? Whereas philanthropic money, the foundation money, government money, it was able to take bigger risks. But you all saw that there was actually this gap in traditional VC, right? Which is actually counterintuitive to me, where I think of first project as having a bigger gap and traditional VC not. But the way that you just explained it makes a lot of sense, where there are a lot of people in traditional VC who don't maybe get some of the gaps in the market and haven't been in climate as long as your team has, right? And so taking the traditional approach can actually, with that background, solves a gap in the market in a way that you all wanted to solve. And again, correct me if any of that is wrong, but that's my understanding. And just to clarify, Elemental still exists, right? Like, Don, you're still running Elemental while you're also running Earthshot, which is like wild. We should do a productivity hour with you at some point. But until then, so you're doing both. Because I think Elemental is just so interesting and special. And I think that the fact that you all are doing traditional VC is also just so interesting and special, and probably is a reason that you all have great LPs, right? Like, again, Elemental's founder is one of them. John Doerr, Tom Steyer, like that, just great people. Microsoft, like all the best people that you want to be funding a climate VC fund is funding you all, and I think they see the work that you're doing. But anyway, I'll stop there. Was that understanding essentially correct?
Yeah, I mean, Elemental definitely still exists. It's growing really quickly. We're hiring too. And what I think is really interesting about Elemental is it enables us to be right on the edge, really on the bleeding edge, and try things that you really couldn't try in a, an Earthshot Ventures or a for-profit context. And so there's lots. So for example, one example would be our equity and access track and what we've built there. So over the sort of time of developing Elemental, we sort of formalized our equity and access work maybe about 5 years ago. And the way we test everything at Elemental is first we do a prize or a test. And usually that's for our internal portfolio. It's already been vetted, but we want to try something new. So in this case, we did what we call the Just Innovation Prize. It was open only to the portfolio. And we said, what we've seen be really effective and what we want to test is you folks in the portfolio in partnership with a community-based partner, someone from the grassroots, someone from where you're deploying. And we want to test what that project looks like. So we awarded 3 of those. We tested them. A couple of them went well. We learned things as well. And then the next year we launched sort of a full track. And so this is what we're trying to do. And we launched that as the equity and access track. And we said within our track, what we want all these companies to do who think this is going to be a competitive advantage for their company or think this is a risk they need to understand better is to apply with a community partner and actually start building that relationship between a startup and a community partner, which is really challenging because they speak really different languages and come from very different worlds and backgrounds. And we'll do the mediation, we'll do the conflict resolution, we'll help you scope that, we'll help you figure out how to do it. And then we built that out as a track for a couple of years. And then after doing that for a couple of years, now we've integrated that into every single company we fund at Elemental. So every company, we're actually going to help companies try to find a community partner that can help them along their commercialization path and help them grow. And so that kind of work you just couldn't do really as a traditional investor in that way. We built a team with that expertise, and we've actually built now a software product that we're starting to roll out with our own team, and then we'll roll out to other folks more broadly later this fall and next year. And essentially to take people through how to do that through a software product, which sort of starts with introspection. It's called The Journey, starts with your own sort of journey through it. And so we've been able to sort of iterate and be creative in a way with the Elemental platform, and then test those same products and those same ideas within our Earthshot portfolio, and then with other sort of venture-backed portfolios and other high-growth companies over time. But really starting with our community that we've built of companies and the buy-in that we have from them to test this stuff. So that's why, that's what I think feels really energizing about the work at Elemental is we can continue pushing that and trying things and failing and being right on the edge of what we think is needed in the industry, but what people might not actually be ready to grab yet from kind of a for-profit investor perspective.
Love that. Austin, feel free to jump in if you have anything as well.
Yeah, sounds good. And if it's helpful, I'm happy to just give like a little bit of background on Earthshot and what we're looking for, and some of the ways that it is complementary and different from Elemental. But Earthshot Ventures, as Don mentioned, we spun out of Elemental with the goal of raising $50 million for a traditional venture capital fund. We've closed $93 million so far. We've been investing out of the fund since October. We've made 13 investments. And our check size is from 500K up to 2.5 million. So that gives us a little bit more flexibility to participate in some of those later, larger rounds. Whereas I believe, Donnie will correct me if I'm wrong, but I believe Elemental is capped at $1 million invested per company. So just slightly different in terms of exactly what we're looking for, but we look in a lot of the same places at Earthshot. Energy, mobility, food and agriculture, and then industry and carbon are the main places where we look to invest. But very similar to Elemental, we're incredibly founder focused. We are only going to make an investment in a team that we really feel passionate about. And from a DE&I perspective, we share all the same values as Elemental that Don already mentioned. We certainly want to make sure that we ask those tough questions up front and see that there's a potential for impact, not just on carbon, but also from a community building perspective. If there's a way to improve broader sustainability through some of the investments that we make, that's certainly something that's important to us as well. So yeah, I think that it's great that we have the shared vision and that over the course of our investing history, although that on the Earthshot side, it's been short, that we've already had the chance to collaborate on quite a few deals. And there have been some companies that we haven't invested in, but that we have sent over to Elemental as well, that are now part of their cohort, and we look forward to continue those relationships also.
Amazing. Excellent. So I've got a few more questions for you all. One, I'll go to the meatier one. So one is essentially thinking about it like a request for startups, right? We've got this audience of folks that are hungry to potentially start, grow their companies, maybe invest, but they're all over the climate tech space, mostly entrepreneurial. What problems in the climate tech space do you think entrepreneurs today should try to solve that you would like to encourage them to take on and that you potentially would want to fund?
Mm-hmm. It's such a good question. I'm curious on Austin's thoughts too on this. I mean, my sense is twofold. One is we basically go after the highest emitting sectors. And so we're very interested in companies that are taking on really tough problems with an enormous potential market. But basically we look for teams that just know something really special that the rest of us don't know. And so in some ways it's almost impossible to answer that question, because the companies that I've been most excited about, companies like Leap in our portfolio, others, like those Leap founders so deeply know the challenge of like creating sort of like Stripe or like the payment back end of demand response, right? And that's not necessarily a problem that everyone's shouting from the rooftop, but they lived it, they knew it, and they started a company that's doing really well to address it. So in some ways, it's finding companies like that just have a really unique perspective on the world. Another example of the Earthshot portfolio that maybe Austin can talk about is like Halo Car. Like we weren't saying like the problem they're solving is the number one problem that we're focused on, but we care deeply about transportation access. We care about transportation equity. We care about electrifying transportation, and they had a totally different take on how to do that. So in some ways, I think as long as it's going after enough of the emissions pie, we want to find entrepreneurs who are actually trying to do something really different that we didn't really know was a solution, but they totally convinced us that it is, and they know this market or this problem better than anyone else, and ideally have experienced that problem. So Austin, I don't know if you want to comment on if that was your experience also with Halo.
With Halo, I think it's really great. Just in case folks haven't seen their website, the quick version on Halo is they are trying to do Uber that delivers itself with a remote controlled car, and then you jump in as the driver. So then instead of having an unused seat in every single vehicle delivery, then you can bring more people on board. You can do one-way trips, and it makes the adoption of EVs even easier from a fleet perspective, because you can, once a car is running low on battery, you can drive it to a place where it can go there, then be charged. But anyways, I think Don's exactly right. In terms of what problems should folks be leaning into the ones where you've got some expertise that you can bring to the table, if that's the case. But if we kind of pull out from that very individualistic kind of where you have strengths, I would say that in general, if you look at the major sources of emissions, Don's exactly right. Like industry is really, really hard, and there's not a lot going on there. So if you've got expertise in that space, please, we need help there. If you look at transportation, that's a space that's been pretty decently covered, but we've still got a long way to go. But if you, like 10 years ago, if you talk to somebody about an electric vehicle and that we would be where we are now from an adoption perspective, the Teslas of the world and all of that, I think that folks would be surprised. Whereas now EVs are part of the broader lexicon that's out there. From the built environment perspective, if you just think of the number of homes that are available in the US and then also throughout the world, and same deal with the number of buildings, if you compare that to the transportation sector, where a vehicle is probably going to at best have a lifetime of 15 to 20 years, but it's probably more like 10. Whereas if you look at a home or a building, which has the potential to be there for 50, 60, 100 years, and that's a huge component of our emissions profile, where electrification is not yet part of that broader lexicon. And so if you've got an interest or passion within that space or skill sets that you can bring to bear and pair up with a technical co-founder, whether that's in HVAC, whether that's in controls, whether that's in any of those spaces, I think that's a really, really interesting space that is starting to get some momentum and more interest from investors, but needs a lot more innovation that is not yet as mature.
Incredible. All right, this might be my last question, and then we'll go to audience Q&A. Another kind of meaty, potentially tough one. That might be too broad, but I'd love to hear what you all think. What are the common pitfalls that entrepreneurs often make in climate tech, right? Like Don, you've seen this for 13 years, and I think you've brought in mentors across the stack and across stages. How have you seen, what are the problems, and then how have you seen people avoid them? So you can be as specific or broad as you want, however you want to answer this.
Sure. Well, I mean, I think when I first started, the challenge was that we had a lot of technical founders, people coming right out of universities or labs, and we're trying to commercialize technology without really strong business founders alongside them. That's really changed, especially in the last couple of years when we see people coming out of tech, people who really know how to scale companies for growth before coming into climate because they realize that, you know, either their sky turned orange or something, you know, they have kids or something motivated them to come into climate. So we're starting to see those two worlds of talent merge, which has been, you know, really transformative from my perspective, from the kinds of companies we're seeing and investing in. We also have had some successful climate companies like Tesla, where there's someone leaving every week to start a new company. And so you start to see the ecosystem be able to build on itself in a really healthy way. You know, even at Earthshot, some of the companies we've funded, both at Earthshot and Elemental, have been started by either by alumni of Elemental or CFO that was at Elemental or someone else. So we're starting to really see like a lot of ecosystem building around that. Some of the current pitfalls that I see right now are, I mean, we still see a huge challenge around sales and commercialization. And actually, I mean, sales is sort of one of my favorite topics, and I think gets shortchanged a lot in climate. But how do you price something? How do you sell it? How do you structure contracts? We, you know, over the last number of years have seen a number of companies that get sort of piloted to death. And that is partly the problem of the customer, like the utility or the big corporate, whoever it is that's moving slow and not really understanding the startup. But it's really a problem of the startup. And it's something that can actually be avoided through contract structure, through really understanding long sales cycles and slow sales cycles and sales process. And so that's something that we lean into a lot at Elemental. Like, how do you actually sell this thing? Who is your exact, you know, prototype of customer and your archetype of customer, and how do you understand them? And how do you really lean into sales in an expert way like other industries have? And at climate, we sort of tend to think, this is like so good, this is so much better, people will want this. And that's just not proven to be the case. So I think that's one piece of it. And then the other part that's really related to that, actually, which is one of my favorite gaps that we work on, and that even just the last couple of days, I was talking to a couple of entrepreneurs and saying their biggest aha moments came through some of like actually learning messaging. And so again, it's like sort of these like building blocks of building a company, but messaging, which is basically like, what does the person who you're talking to know to be true? What do they believe? What do you know to be true? And how do you build that bridge? And I mean, Austin's talking about built environment. This is a perfect example. If you're trying to sell to like a building engineer or sell to someone who owns all of the real estate, it's a completely different sale. And like what they know is different. And how you sort of message them, like bring them into your world and make them evangelists, is completely different as well. So, you know, I think teaching entrepreneurs or helping entrepreneurs like unlock their best inner communicator is some of the like key barriers that we see. And I guess the final one I'll say is that, you know, there are patterns of industries over time. So we saw energy really go through, you know, a lot of startups, a lot of change, a lot of startups grew. And we learned a lot of lessons, like, for example, how to, you know, sort of do energy management in the home. We started seeing those companies probably 12 years ago. And there's a bunch of them now, and some of them have actually been successful. You start to see the same thing for transportation management in the home, water management in the home. Like, you start to see industries repeat themselves. And so I think one of the things that we're really interested in is how does your CEO become a great recruiter? Something that we look for in every CEO, because they can't do it by themselves. Every CEO has to be a great recruiter. It is just table stakes for building a company. And when you're recruiting people, are some of the people you're recruiting people who have done it before, seen it before in a different industry, and you can bring them in, teach them your industry, and benefit from what they know.
Yeah, that was a great list from Don. I agree with all of those. A handful of things that I would add to that. I think that particularly coming out of, if you will, Clean Tech 1.0 and a lot of the lessons learned from those experiences, we still see quite a few founders come in with pitches that are really focused on the regulatory environment or really focused on carbon markets looking forward. And as we're seeing now, even if you take it, for example, the federal tax credit for EVs, huge dynamic changes, and we've seen pitches that would have basically put that company out of business, even though it's a net positive for the industry overall. So I think that as you guys are thinking about starting different companies or joining one, if part of the business is reliant on that regulatory structure or is reliant on a green premium or carbon credits, I think that we will get there. But I still think that we're still, half a decade to a decade away from that really being bankable from an investment perspective. And so as a result, the successful pitches that we see from companies that have either a regulatory component to it or a carbon credit component to it, it's icing on the cake. It's not kind of the core business.
Amazing. Okay, that was an awesome answer. So our first question from the audience is Jack. So Jack, I'm going to spotlight you and you can ask them yourself.
Hey, super excited to be here. Hey, Don and Austin, very nice to meet you. I'm a huge fan of Elemental and just love all that you're up to over there. So thanks so much for this chat. My question is about, I know Elemental does so much, and you talked about some of the things, investing at multiple stages, investing in projects, even helping companies through the equity and access track. I'm curious if there's anything that you've decided as a company that you won't do, and why?
Ooh, it's a great question. Yes, the focus. Yes, lots of things, probably more every week that we decide we won't do than we will do. So the way that we sort of think about, or that I think about it, and we've tried lots of things over time and been approached to do lots of things over time. I'll give a couple of examples of things we don't do. But the way we think about what we do is it's in three concentric circles. The center is invest in startup success. The second circle is partner deeply. And the third circle is inspire action. So first, it's basically keeping entrepreneurs always at the core of what we do. And if we don't have a really awesome portfolio, it's hard to do everything else because people are not that excited to work with companies that aren't solving really important, interesting problems with really compelling founders. So that's at the center. The next circle is partner deeply. And the reason we call it that is because we get approached to partner with people every single day, and we say no to most of them. And the reason is that we've realized that for us, partnering is about relationship, and we just have, a limited capacity to have really meaningful relationships with people. So whether it's a community partner, whether it's a corporate, someone else, we have a real intentionality around how we partner. And then the third is inspire action. And the idea is that if we keep all the things we're learning within those first two circles, then we're really not making enough of an impact on the climate problem, which is so huge. So we have to be sharing learnings and inspiring action. So everything has to fit into one of those three pillars. And then one of the things that we don't do, which we've tried over time, we get approached probably multiple times a week to run accelerators for other people, to like run curriculum for other kinds of programs, or to teach people how to do stuff. And we've just realized over time that we can do some of that through publishing, but we actually, part of what we do is curate a portfolio where we're screening entrepreneurs for very specific things that we're looking for in terms of growth mindset and ability to engage in equity and access and all these other things. And it actually just works best if we put our energy into working with entrepreneurs that we select and screen. And that when you try to sort of when we try and deliver that curriculum in sort of a disembodied way to someone else's portfolio, it's much less meaningful, and then we get much less learning out of it to enable us to help other people. So that's one of the things, for example, that we don't do as Elemental, but it's a long list, and some days wish it was longer.
Yeah, that makes a ton of sense. And I really like what you said about the deep partnerships piece and also sharing learnings. One of the things I was going to ask about was the Square partnerships, but I know you have an awesome page on your website that talks a lot about what are Square partnerships and how are they effective. So I'm not going to ask about that. Gonna give time to other people, but thank you both.
Yeah, and while you do that, I'll just share that for Square partnerships, I mean, we were doing that for almost 5 years before we published our toolkit on it. So it's funny because like sometimes it takes us a long time to share learnings because we aren't sure what we've actually learned yet for a while, and it takes a while for things to actually come to fruition and kind of start working. So, you know, we always want to go faster, but I think also we've worked really hard to actually like try all of our tools in lots of different ways and in different venues with different communities and different companies before we publish anything. So hopefully there'll be more coming soon, but that's why it takes us a while.
Amazing. Thank you, Jack. Awesome. So Francis and Emil, you actually both have similar questions. So I'm just going to pop you both up. Francis, can you go first?
Sure. Thanks so much for hosting this session. I was going to tweak my question a bit because you started to answer it already, Austin, when we're talking about the kind of support given to portfolio companies. So maybe if I can tweak it, I would ask, look, the path to commercialization is so long and it's such a dynamic environment. What are some of the market signals you look to gauge the viability over a multi-year horizon? And what do you think about concerns that we may be in another clean tech 2.0 bubble?
Yeah, really great question. I think that the first question that we ask all founders in terms of where they are is traction from a revenue perspective, with a understanding that that's going to be an imperfect signal, particularly for some of the businesses that are going to have some of those longer lead times. If they don't have that revenue signal, then it's really important for us to understand where they are with customers, whether it's from a pilot perspective, conversations that they've had, how close they really are to that product market fit, to help us understand it and really get a sense of that challenge. But then it's also really important from that perspective of just understanding how big the market is. And sometimes that's a place where we don't necessarily just take the word of it from the founders, but either from our experience as investors or operators or from our network, where we can go in and say, okay, well, is this a problem that if it's just so massive that even if they only get 0.5% of the market, that this can be a huge company, then that's another way that if we assess that they are hungry, they've got all the skill sets to really drive success from a sales and marketing perspective, then we would still potentially lean into a company like that. I think another thing that we'll look for is particularly in some of those longer lead time industries. So let's take, for instance, utilities. We made an investment in a company called Noteworthy. And at that time they had early traction, but not like a full developed like pathway to huge growth. But one thing that we recognized is that not only did we have a lot of faith in the CEO and the management team, but they were taking the right approaches that we had seen work for other companies to get across the line and break down the walls that allow for them to land, get a small project and expand. And so from that perspective, having seen that happen both from the investing side and me in another industry, municipal government, I've seen so many companies go down a path of just really being focused on, I'm going to sell to cities, I'm going to sell to counties, and just get annihilated in the procurement game. But a handful of CEOs have figured out, okay, well, if I do these three things in terms of finding the right partners that already have funding in a budget cycle, and they're able to do that, then those are some of those early signals that we'll look for, that in place of traction or revenue or partnerships, that will give us a lot of confidence that a company will be successful.
Thanks, Francis. And Emil, I think you had a kind of similar question. Do you want to ask that?
Oh, sure. Yeah, thanks for both of you, all of you. Just wondering about how, like, after you decide to invest in a company, like what specifically, like, how are you thinking about supporting the founders also like thinking about follow-up investments, what specifically you can bring to the table?
Yeah, Dawn, do you want to take that one first? I can follow up.
You can go ahead.
Sounds good. So for us, it really depends on the founder and at the stage. So I mentioned Noteworthy were one of the first institutional investors in that company. And so with Noteworthy, we're meeting with the founder pretty regularly, giving strategy advice, making introductions to strategic partners that are at the right size, that are appropriate, helping them think through who their next hires should be, helping them with the recruiting process. Really, we're not in the weeds, but we're much more of that sounding board where we're involved talking to them frequently and often. Sometimes, let's take another example for a company like Lilac Solutions is another company that we made an investment in, much farther along path to traction, already had a board of directors. Really, the thing that we brought to the table there was being able to really validate from a climate perspective just how big of an opportunity this was. And so on that front, we've probably been more helpful on helping them tell their climate story, helping them with their DE&I goals than we have been on that day-to-day advice on how to think about the business strategically. So it really does depend on the individual company. But the great thing about not only Earthshot, but the relationship with Elemental is that we've got the track record and the network to be able to do both, depending on the stage of the company, and be able to go deep enough on each of those different paths that it can bring value to the table.
Yeah, I'll just take one other quick shot at that one, which relates to a question that came in earlier around what stage of company we work with, because Austin's right, it really does depend on the stage. And the way we think about it is not just technology readiness level, but we actually develop something we call commercial readiness level through the commercial inflection point scale, because your technology can be ready and then still has a long way to go to commercialization, and that's the climate impact. So I'll drop a link in here to how we think about that. But we think about technology as just being sort of one piece of what's needed to be effective. And there's a lot of other pieces that are needed from the business side and also the community side to be effective. As we're sort of seeing companies grow, there's lots of sort of bespoke services that we provide either as Earthshot or Elemental and a whole sort of suite of coaches and other things. I think the most important thing that we do actually is create a community of entrepreneurs in both places. And that's because most mentors have been out of the game for a couple of years, and this game changes really, really quickly, but founders are in it, right? So if they raise their Series A 3 months before, they have much better data about what's in the market than anyone else that raised their Series A 2 or 3 years ago. That world has changed, the terms have changed. The only people that are as versed in it are the lawyers. You don't necessarily want them as your mentors, although some of them make good mentors. But really it's about creating a community of entrepreneurs who are non-competitive, which is so one of the things we do at Elemental, and also within the Elemental portfolio and within the Earthshot portfolio, most companies are non-competitive and they can actually use each other as sounding boards. And one of the things we want to do is create a container of trusted space for them to work together. And so I think, wherever you sort of are in your career or in your journey, sort of creating that kitchen cabinet of people that are a little bit ahead of you, a little bit behind you, a little bit to the side, like where there's actually people you can bounce things off of in a trusted space, it's going to serve you well for many years through many iterations of your career and your growth.
Thanks so much.
That. Yeah, thank you, Emil. Thank you, Francis. Love the shout to community as well. We have an anonymous question, so I'll just be like the voice of God for this one. But how have the recent changes in global equities and the economy affected the risk investment appetite for VC capital in climate tech? And also maybe for Elemental, right? If it's a different effect or the same effect.
Yeah, I mean, for Elemental, we have this amazing privilege of investing philanthropic and government capital. So we do take slice of equity in all of the companies, and some of the companies have done really well, and that's been really beneficial for the nonprofit. But we invest with an impact first, return second approach. At Earthshot, it's the reverse. We invest for returns first, and it has to have impact to clear that, but it has to be its returns first. So, so they're a little bit different. So for Elemental, I mean, that means for us, like continuing to take really big swings. We're going to announce our next cohort for 2022 in the next few weeks here. And you'll see that in this cohort. There is some stuff in there that are really big ideas that have a long way to go, but are really important for sort of our environmental future and our climate safe future. So we're able to continue taking those risks. We're also really fortunate that the funders we have continue to lean in to Elemental. So I think even as the global economy has been so challenging, the climate risks have become so much more evident. And so we don't see funders sort of scaling back their ambitions. On the contrary, we actually see funders and philanthropic funders really leaning in and recognizing that we're going to have even more economic turbulence ahead if we don't get in front of climate. So they're really thinking creatively about how to lean in, and that's been really gratifying to see. And then on Earthshot, I mean, it definitely changes how we think about investing a little bit, and also maybe speak to a couple of the specific terms, but you know, for example, I mean, it's a question that we ask every single entrepreneur that we're investing in now. Like, how is the macro environment, you know, impacting you? We'll probably do a couple more customer calls with their customers to ask them, you know, how their spending is changing. Sometimes it means that they need the solution that we're going to invest in even more because margins are thinner and they really need to cut costs or better manage whatever it is they're doing, whether it's agriculture or something else. But other times it can create a new risk for them. So that's how we're kind of thinking about it. But I don't know, Austin, if there's anything you want to add to how we're investing a little differently than we were in October.
I think that's a really great place to start the conversation, because it's 100% right. What I would add to it is that this is like one of the best times to be a climate entrepreneur for a couple of reasons. One, like there's a ton of capital that came into the space just before the public markets took a big hit. So there's a lot of dry powder that's out there looking for a home. And that was definitely the case, you know, even like 6-7 months ago. Founders were looking at, you know, spacing their rounds out every 6 months because they knew they would be able to go out and get capital pretty easily. You saw more firms that traditionally had played in public markets coming downhill, meaning that they would be participating in you know, even Series B, sometimes Series A investments versus just playing in the public markets. I think that has changed a bit over the past 6 months, and you're not seeing that as often. So I would say probably from like the May to June, maybe July timeframe, you still saw a lot of deal activity, but instead of a fundraising round taking 3-4 weeks to close, it might take a month to 2 months in order for them to lock up all that funding. So I think that has probably changed, but I think that's also starting to change now as we're coming out of the summer, and the deal velocity has picked right back up. In terms of how that impacts how we think about our investments, since we are relatively early stage focused, we probably don't have a huge difference in terms of looking at what an exit potential may look like in the public markets, just because the timelines and the horizons for what we're investing in, we think that will likely be through whatever troughs we're seeing on the valuation multiples. But it is something that we definitely take into account. Without naming names, I know that Don and I have been part of those conversations when we've been looking at companies and we say, look, this company used to trade at 20 times EBITDA, and now they're trading at 10. Does that, from a risk perspective, it means that it's just inherently a more risky bet. But we're in the risk business, right? We're not necessarily looking for the super safe outcomes that are going to be kind of your 2 to 3x returners. There's lots of great capital that's out doing that, but we want to find the businesses that have the potential for upside that are 10 plus, right? We want, and ideally, closer to 100x. So to a certain extent, the fact that valuations in the public markets right now is low means that we have the opportunity to be careful and cautious, but we think it also puts us in a really strong position because there should be a correction in the opposite direction down right as we're looking to realize some of those investments.
Yeah, and you all raised $93 million in this market, which is a testament, I think, to what you all are building. And I think it's really smart to start deploying it in the way that you just talked about. So last question we'll try to squeeze in. You mentioned, and again, anonymous, you mentioned the importance of pattern recognition across the portfolio, helping you be a learning organization. Can you talk about that a bit more?
Yeah, and I would say we have dry powder, but so do lots of other climate funds. So there's a really cool community now of new people funding companies in climate that have really new perspectives on this. So it's a good time from that perspective too. And many of them we've co-invested with, and they're really some wonderful people out there. I think on the pattern recognition side, I guess I'll just maybe close since we have a minute left by saying, the things that we look for in founders. So they actually align pretty well with our elemental values. I would say the three that probably will resonate with this audience are humble spirit. So we're looking for people who know they don't know everything and are going to, work and change to sort of meet what the reality is and be willing to be wrong. We actually have lots of ways that we test that, and it's really important to us. We also look for growth mindset, which is really related to humble spirit. But are you excellent and getting better every single day? And know the things you have to do to get better at. And so we ask people a lot of questions about what are you working on? What are you working on personally? What are you working on professionally? Where do you think you need to improve? And we can absolutely tell people who really have thought through that. And then the third elemental value that we also look for in founders in terms of pattern recognition is joyful work. And this can be really hard work. Working in climate, it can be tough. Sometimes we have wins, sometimes it's really hard. And these are people that we're going to be in partnership with for a long time. So just like, hiring colleagues or choosing who you surround yourself with, when we invest in entrepreneurs, it's a long-term relationship. We're going to go through lots of hard things together. And we want to be in partnership with people who, bring some joy, people you want to see on the phone, want to see on the Zoom, want to grab lunch with. Because that is what gives us energy. So I'll leave it there.
Amazing. What a great exit. And also, I think maybe it's premature to say it, but I think that you two seem to bring a lot of joy in your day-to-day work and have a lot of joy. It's probably, anyway, I think that you all bring that. And I think that that's really evident in the way that people talk about Elemental and Earthshot. And so you live your values from what I can tell. And I think that's amazing and rare, but also amazing. And so thank you for joining us. Thank you everyone who's here watching this. We have the recording and we'll share it out as well. But yeah, just thank you. If people want to get in touch, learn more, how can they do that?
Yeah, I mean, for us, they can, the best way is probably to hop on the Elemental newsletter. We share all the open jobs, like lots of all of the insights, everything we're publishing there. And I will say that, I find this to be the most joyful work. I feel really lucky to be able to be in this space and do this work. And we're also open to feedback. So if there's things that people think we should be doing or should be doing better, that's a real gift for us too. So please sign up for our newsletter, send us email at hello@elementalaccelerator.com. Stay in touch. This is a big community. We need it to be bigger. So, and Austin, I'll let you have the last word on Earthshot.
Yeah, same deal. However we can be helpful, we certainly want to do it. Feel free to connect with me on LinkedIn. Feel free to shoot me an email. You can get me at austin@earthshot.vc. If you've got a specific pitch as well that you want to share with our team, feel free to send that to deals@earthshot.vc. And then that's the best way to get into our funnel and make sure that the person that's most qualified to evaluate it does that. But I think that along the lines of what Don said and Candice, I'll just stress this. At Earthshot and at Elemental, like something that's really important to us is that if we're having a conversation with you, even if we decide not to invest, it's because we really want you to do well. We think you're working on something that's cool, that's important. And so something that I'm really happy to spend some of my time connecting with folks, even if it doesn't lead to an investment. Hopefully that'll lead into another connection that can push you down the pathway to success.
Awesome. Austin, Don, thank you so much.
Thank you, Candice. We so appreciate you and all your work. Thanks, everyone.
Bye, everyone.
Thank you. Bye.